Getting a loan at 18 can be a challenging task, but with the right guidance, you can increase your chances of approval. As a young adult, it is essential to understand the loan process and what lenders look for in a borrower. First, you need to determine how much you need to borrow and what you will use the loan for. This could be for education, a car, or other expenses. Make a list of your income and expenses to get an idea of how much you can afford to repay each month. Next, you need to check your credit score. As an 18-year-old, you may not have an established credit history, but you can start building one by making timely payments on any existing debts, such as a credit card or a student loan. You can request a free credit report from the 3 major credit bureaus to check for any errors or discrepancies. Now, you can start exploring loan options. You can consider federal student loans, personal loans from banks or online lenders, or loans from credit unions. Each type of loan has its own interest rates, repayment terms, and eligibility requirements. Make sure to read the fine print and understand the terms and conditions before applying. When applying for a loan, you will typically need to provide identification, proof of income, and proof of enrollment in school. If applicable, you may also need a cosigner, such as a parent or guardian, if you do not have an established credit history. To increase your chances of approval, make sure to shop around and compare rates from different lenders. You can also consider a secured loan, which requires collateral, such as a car or savings account, to reduce the risk for the lender. Finally, before signing any loan agreement, make sure to read the contract carefully and ask questions if you are unsure about any of the terms. It is also essential to have a plan in place for repaying the loan, including making timely payments and avoiding late fees. In conclusion, getting a loan at 18 requires careful planning, research, and preparation. By understanding your options, building your credit, and making informed decisions, you can increase your chances of approval and set yourself up for financial success. Remember to always borrow responsibly and make timely payments to avoid damaging your credit score.